Trading during the holiday season can be hazardous to your pocketbook. The times around Christmas and New Year's are often challenging periods in the markets. But if we're patient, there's always an opportunity to be had. Here are 3 pre-Christmas trades that give us an opportunity to stack some green pips under the tree ahead of December 25th. Let's keep it short and sweet. And under 5 minutes, we're going to highlight trade setups in the Euro, Great Britain Pound, the US 100, and gold. But first, it's quiz time. Answer the following question correctly, and you may win access to the HTT trading room. Ready? All right, here it is. What is the United States Federal Reserve's current stance on monetary policy? Is it A, restrictive, B, accommodative, or C, data dependent? Leave your answer below, and good luck. Okay, with the CPI releases, we know that the Great Britain Pound and the Euro are going to be in play. We can easily go to our triple screen trader approach. We could look at those pound pairs. We could look at those Euro pairs and really trade them as those CPI releases come across the board. Now, as far as our target market, the Euro, Great Britain Pound, challenging market. Oftentimes, it doesn't move at all. It's just a function of rotation. A couple of things you need to be aware of here. Number one is that weekly triple bottom at 85.49 and 85.52. That is a very tight weekly triple bottom. I would be aware of that as potential downside support. And also from a Fibonacci perspective, you have a real nice wave there, a spike high right down to that triple bottom. And you'll notice that last week got an absolute beautiful 38% sell. That's fantastic. So I would be looking at 38% right up there at 86.33. That would be a topside resistance zone. 62% up at 86.84. That would be resistance in 87.20. And all those are potential sells. And the triple bottom, the weekly triple bottom, that's a support zone. So that would be your buy. So we have an opportunity really to trade the Euro, Great Britain Pound, selling from resistance and buying from support. And if you don't want to do that, check out those Euro, Great Britain Pound pairs over on our triple screen trader. One of the featured metrics that economists use to predict recessions is consumer confidence. When consumer confidence lags, consumption and growth follow suit. Wednesday's consumer confidence numbers are sure to move the markets as traders price the odds of a recession in 2024. One of our target markets for midweek trade is going to be the US 100, and the reason why is because it's on the move. Remember, we need volatility to make money in the markets. As you can see right here, here's our US 100 CFD monthly chart. Take a look at these all-time highs up there around 16,771. December's highs rotating right around that zone. We're on the cusp of these all-time highs. So if consumer confidence comes in and it really suggests that maybe that growth we saw from retail sales last week may be in the cards again and again and again throughout the holiday season, then we have an opportunity here maybe to touch these all-time highs before New Year's Eve. Something interesting. So if we've got those fundamentals, you've got rate cuts, you've got strong consumption, with those fundamentals, we can look to bid this market. Now, we are right in this order block, right up around these all-time highs. You can see what I call it a value area, nice compression zone. Sort of check that out and retraced a little bit. If we get a good solid retracement off of this, then we could definitely bid this with a little bit of confidence. I would take this down to a weekly, and what you can see is really the disjointed price action. So we want to go back to that monthly. We want to make sure that we have a nice solid concrete level to trade with this week. Remember, our trade locations make us better than the next guy. We're going right from that spike low, right from that swing low, all the way up to wherever our high may be going into midweek trade. For right now, let's just go right off of those all-time highs somewhere in there, and you're at about 15,775-ish. So that could be a pretty good bid if, in fact, we get that opportunity to buy the midweek or late week trade. Once again, if you do get that reversal develop from the all-time highs, could happen. For me, we're very, very bullish, and we want to get long this market. That's just one macro support zone that may pay off for us late next week. Friday is this week's key session, highlighted by the PCE Price Index release. On the heels of a flat November CPI report, PCE is expected to show further evidence of falling prices in the U.S. But will they? More than likely, yes. Barring a major surprise, the greenback may be in for a more bearish extension, and that means rising values for commodities and risk assets. Key market is gold. Okay, it's not a party without gold. Friday could be a big day for the gold market. Why? Remember, that Christmas holiday has already kicked off in a few areas. Liquidity may be low, but that PCE reading is going to be a big deal, and it will definitely impact gold. You can see right here our monthly triple top. We've been highlighting this area quite often throughout the year. There's your triple top, 1, 2, 3. Well, we saw that big washout of this level earlier in the month, and that 2071 area, that 2072.50 $1,950 area is now the top side of price. So the real question is that just a brief washout? Is the trend going higher, or is this a potential top on that market? I think there's a couple different ways to play this one. For me, I go right to my Fibonacci's, and I want to see this spike low right here to that washout spike high. Now listen, your numbers could be a little bit different than mine. Each broker has a little bit different, especially when you're talking spot gold. So if your numbers are different than mine, that's the structure of your wave. And then what we're going to do is we're going to identify our support and resistance levels. I love this area right up there to the top side, probably 2072 sells. That's pretty darn good resistance. Now, as far as bids, 2018, that's a pretty big level. 62%, 2038, that's a pretty good level. And 78%, 1881. So those are pretty darn good support levels that you would play to the top side. And then as far as that top side resistance, that may be an area where you could sell. These are short-term trades. These aren't positions. If I was looking for a position, we'd be looking to bid something like a 1938 for the intermediate term to the top side. Those are the levels that I'm watching for gold. Core PCE and PCE, that's a big-time market mover. Liquidity might be reduced. We could see some nice moves on Friday for gold. Holiday trading can be tricky. Don't let it get in your pocketbook. Stay disciplined and stack a few green pips under the tree. The best holidays are spent with family, friends, and a well-stocked trading account. Now make sure that your Christmas is as merry as it can be. Right now, our end of the year market read is simple. Stocks and commodities are up, the US dollar's down. As always, hit the subscribe button and check out a free trial to How to Trade to learn more. If you need a broker, Switch Markets is a good broker worth looking at. Be sure to click the link below. From the team at How to Trade, we want to wish you a very Merry Christmas, a Happy New Year. Let's get some green pips, and we'll catch you on the next one.